Okay, folks, welcome to Sunday Night Futures Live. This is Bob Desmond, and it is the 31st of May, 2020. A new trading week has begun. Trader Isaac, hello. What we're going to talk about first is we're going to do a quick run through how the futures are opening up. You can see that the S&P futures have opened down around a half percentage point. No great shock here. We had a very, very strong close on Friday. So we're going to go through the futures action. We'll let the futures settle down. We'll do some headline discussion. We'll also talk about the economic data which is coming out this week, which is going to be big. We are also going to do some stock chart requests. So, and I have a list of them here. So thanks, members. Trisha, I don't know if you're on. I did get yours, and you did yours last minute, which is fine. But Franklin, good evening. Nicholas. Amerimigo, Jedi, hello. NY Jets, hello. All right. Okay. So the futures, again, they opened down about a half percentage point. We're rallying back a little bit here. It's way too early. We need to let these things settle down. The mid caps. Down, not as bad as the E-minis, though. Let's check out the small caps. They're down more than the large caps by about a half percentage point now. They were lower. Where's the NASDAQ 100? And wow, they're taking it on the chin here. They're down bigger than the small caps, and certainly by more than the S&P 500. But we've been seeing that of late, right? We predicted this going into last week's trade. I said the theory of the week was going to be that we were going to see a rally in non-tech names, and they would outperform the technology sector. And by and large, the industrials, transportation in particular, did very, very well last week, whereas, let's call them the Trip Q names, they did well, but they underperformed the stocks that are playing catch-up with the rest of the market. Let's check out the dollar and, of course, bonds. And I'm going to go to a chart because I keep getting asked, why do you think this market is going higher, and why didn't we break down to new lower lows? I'll go to the chart. I'll show it. It's no secret. All right, so the dollar down. We are flirting with a monthly breakdown on the dollar. Obviously, we have the closing prices for for May in the books. So anything forward will be the June pricing. And we closed out the month of May right at monthly support. So it'll be interesting to see whether or not we break down below monthly support. If we do, you're probably going to see precious metals continue to rally higher. So let's head over and take a look at gold. I don't have gold ready. Sorry about that. Where's my gold? Just bring it up. Okay, so gold up a quarter percentage point. Looking good here. Silver. Silver just had a bang out week last week, and this week, new weekly highs already for silver. Now, I wanted to take a look at some commodity prices in terms of ag. Not so much the precious metals, but we've been talking about food prices for a while. For weeks upon weeks now, we've been watching the weekly charts set up on a lot of agriculture names, and they began breaking out. And I said, watch out for food inflation. And sure enough, the AP is finally publishing that, wow, there's food inflation. Go picture that. So let's take a look at a weekly chart of corn. Corn breaking out of a downtrend. Wheat. Wheat looks poised to continue this move up higher. This is last week's price action, a bullish key reversal bar. Let's see what else we have here. Soybeans. Not too much of a move in soybeans. Let's check out natural gas really quick. Natural gas, we traded. As a matter of fact, I have a request for UGAZ I need to go over. We traded last week, and it is down about a little over 0.75 of a percentage point at current. So we just did a quick day trade on Friday. We scored about 11% on UGAZ. What else do we want to go over? Let's take a look at bonds. The 10-year bond price. All right, so we are rallying. That means yields are pressing lower. And I think that what we're seeing right now in equities is not going to be long-lived. I think that we are going to move higher this week. So while we're down at current, I think that we're going to see a rally. Let's check out the VIX. The VIX is higher. Now, going to some headlines. Listen, this weekend has just been utterly bizarre when it comes down to what's been going on with the riots across the country. I mean, I watched that video of, I don't want to get political here. I really don't want to. I debated whether or not I should talk about this, but, when you see that a lot of what you're seeing with these riots is organized. I mean, they're bringing in bricks before the protests or riots begin, and you have no construction in the area. It's all set up. And I'll share this link, and you could watch these videos that are attached to it. I can't play them or else YouTube will ban me, or they'll block the website or the video. You take a look at that, and you say, what the heck is going on here? I watched the video of that man, George Floyd. It was horrible. It was disturbing. I was really disturbed afterwards. But you see what's going on, the violence, the senseless violence that's going on. You're saying, what the heck is going on here? I mean, it just doesn't make sense. And you can see that Antifa is behind it. As a matter of fact, Trump is designating them as a terrorist organization, which is good. It's about time. I don't know it took so long here. But long story short, how does this affect the financial markets? It really, in the end, we may be seeing some knee-jerk reaction to the events that are unfolding nationwide in the markets at current, but net, I don't think it's going to last. Unless, of course, you see a raid on the New York Stock Exchange or something high profile that impacts the financial markets, or they attacked CBOE in Chicago, something crazy like that. But otherwise, I just don't see it having a real serious impact on the markets. But we need to keep an open mind. So we'll move on. I don't want to. Yeah, I think the gun trade is going to be a big trade this coming week. I really do. Chuck, good evening, Bob. I couldn't access the weekend commentary. Can you review the cost setup? Sure, I can do that. You couldn't access the weekend commentary, Chuck? All right, we'll talk about that offline. Okay. Hi, Tricia. TA, Mr. G, hello. Eric. Hi, Bob. Did you get my email? Trouble with the alerts. We'll check that out. I thought that was resolved. Okay. Rick Roofing. What's up, Bob? What's up, Rick? Will. Oliver, you predicting bear country in June? I don't know. I think we're going to shake this off. I think we're going to press higher. Not that we should, but we'll go over a chart in a moment that's going to tell us why we're going to probably press higher in the month of June. So let's kick things off here with U.S. food prices see historic jump and are likely to stay high. And I want to come down here to where the Labor Department reports that the 2.6% jump in April food prices was the largest monthly increase in 46 years. Prices for meats, poultry, fish, and eggs increased the most. We're long of an egg company, rising 4.3%. So down here, egg prices also reached an all-time record of more than $3 a dozen in late March, but have since fallen to less than $1 a dozen. I don't believe that number because I just bought eggs and they're through the roof. So I eat eggs all the time. So egg prices are still high here, at least in New York. So food inflation is here. The economic calendar as we go into the new trading week. We have the ISM Manufacturing Index. Wednesday, ADP. That's going to be the prelude to the non-farm payrolls. That's the pimp Mac Daddy of them all in terms of economic data. Factory orders. Then you have the ISM Non-Manufacturing Index on Wednesday. That's services. Thursday, initial jobless claims. They're coming down some. The jobless claims, which is good to see. Unit labor costs, that's inflationary. The trade deficit. And then on Friday, again, we have non-farm payrolls. Okay, so a big week for economic data. So expect volatility. Now, why do I believe that the market is going to continue higher? There's no surprise here. There's none. You have the stock market. This is the triple Qs overlaid in gray and the 10-year yield. So you can see that the trip Qs are surging. They're trading inversely of the 10-year yield. So as yields press down, stocks keep moving up higher. And you can see here, this is a correlation of the 10-year yield versus the trip Qs. And there's an inverse correlation. They're trading inversely of each other. So as yields drop, stocks rise. If you want to take a look at a different symbol, let's take a look at SPY. The correlation on this is a monthly chart, while not as great, the inverse correlation was not as great versus the trip Qs, it's beginning to change. You're beginning to see a greater inverse correlation. So as yields pull back further, stocks, the S&P 500 began rallying even harder last week. So the inverse correlation is becoming greater. And on a monthly basis, yields, take a look at this topping action. While yields pressed higher slightly last month, there was a major tug of war between bulls and bears, and we closed well off the highs of the month. And it appears as though they're going to try to press yields lower, and that will likely push stocks up higher. I want to take a look at one other inverse correlation. And that's gold. Completely inversely correlated. So as yields press lower, gold is just surging higher. And I don't see that ending anytime soon, especially now with headline inflation out there. And yes, Trent, thank you. Smash the like button if you would, please. I'd appreciate it very much. Eric, I got you. Eric, to your question earlier, I want to sign in as you later on to your members profile, and I want to see what's going on from your perspective. Okay. All right. What else do we want to talk about before we go back to the futures? Let's go to. So long story short, I think we're going to press higher this coming week, the next couple of weeks anyway. I think we're nearing the election. It's a stone's throw away. As long as we don't have a geopolitical event flare up, I think they're going to try to keep this rally going, and it's going to take a lot to derail it and absolutely demolish the like button. Yes, please. Thank you very much. Thank you, Will. All right. Reminder. Help support the channel. I'm going to use TrendSpider. TrendSpider will be sponsoring a chart request. I asked them to extend this out one more day for this live stream. So it was supposed to end yesterday, 35% off. Normally, I only get 25% off. They're doing 35% off right here, right now, but it ends today. So go to the link below. It looks just like this. Sign up. You don't need the discount code. Don't use the discount code that I provide. That's only 25%. It's already 35% off, but you got to join today, and we will be using TrendSpider for our stock chart request. We check the comments. We're good to go. Eric, you're welcome, pal. We'll get you set up tonight. All right, we're good. All caught up here. All right. Let's start with VFF. Village Farms. What a nice name. Okay. I'm not loving the chart here. The first thing that jumps out at me is that, yeah, we had a great month last month. But note this volume bar here. There's a ton of resistance above, as noted by this resistance level here. All right, so you have a lot of topping action from, let's go with December of 17 through to February of 19. It took to get through this resistance level. We've broken back down below it again back in January. And now, I mean, it's going to take a year and a day to get back above this, given all this volume, a tug of war there. So a lot of overhead supply. So I would say either wait for a pullback. That's an extreme pullback. Maybe you pull back to $4.90 per share. Ideally to $3.73 per share. I know that's a heck of a pullback, but these are the support levels that I'm looking at. However, if I'm wrong and we don't get the pullback and we rally and we close out the month of June above $6.07, well, then it's a long trade. Stokes are bottoming out, hooking up, RSI hooking up, weekly chart. You can see how we stopped dead right at that resistance level last week. You know, I wish I had better news here, but I'm not loving the entry point. Far too much risk, not enough reward. Would I short it? No, definitely not a short. The daily chart looks interesting, but I wouldn't buy it. I would only buy it on a close above $6.07 with a stop loss right below it, or on a pullback to one of these two support levels. So what I would do is this. Me personally, I would keep sensitivity very, very tight on my breakout above resistance. So we'll keep it active for the week. So if we close, the alert's set up so that if we break out and close above $6.07, that will be alerted that occurred. And then you could enter the trade, but use a stop loss right below on a closing basis below that $6.07 mark. Because, in fact, I would probably wait 1 or 2 days after we close above that $6.07 mark, because I'd want to see, you may get a rally, but you're going to get a pullback and a retest of that support level. It's so significant. And on that retest of support is probably when I would pull the trigger on the trade. So VFF, that's how I would play it. Let's go over a QB. Monthly chart first. All right, so we have a monthly breakout here. Not a lot of data. Very nice breakout. We closed at 271. The breakout points at about $1.83. Weekly chart. We became extended on a weekly basis, rallying up and into this third standard deviation Bollinger Band, and we backed off. No shock. We may just get a continuation move lower this week. Let's bring up some automated trend lines here. As a matter of fact, I want to do this. I want to see whether or not I missed something. I call TrendSpider my spell check for technical analysis. So where we bottomed out last week was resistance back here in December of 19. Then again in January, it's now acting as support. So this is good support here. Here's another support level here at 234. Let's bring up the automated trend lines, see what I'm missing, if anything. Oh, wrong button. Yeah, we're right on the money. Hey, pretty good. So let me remove my annotation here. And you can see we were right. So this is good support here at around 1.87. So if you're looking to hone up on your technical analysis skills and you want validation of your accuracy, first draw your own trend lines and then overlay the automated trend lines. Daily chart. You know, if you like the shares, you're confident that they're going to move up higher, then fine. Why do I have two RSIs up here? I think that the shares can be bought on a rally through this resistance level, and ideally a retest of 2.62, and then you can open up a trade with a stop loss right below. So that's how I would play AQB. Let's bring up our daily trend lines are already up. There's nothing there. Actually, it's showing you the automated trend line that you have resistance above, but we already knew that. All right, UGAs. Okay, UGAZ. We know that nat gas has opened down about 0.75 of a percentage point this evening. But frankly, I think that... What are you busting my chops here for? I think that Friday's close was pretty good. We're going to go with the weekly chart. Now, the weekly chart shows you here that we bounced off of support. We did close down on the week. We entered a short-term swing trade on UGAZ using the 4-hour chart. My alert, it expired now, but we were watching UGAZ. It hit that support level. It continued lower, but when you take a look at the 5-minute chart, it's not appearing for me right now. Maybe it was a 15-minute chart. Yeah, it was a 15-minute chart. The 15-minute chart was showing that we were forming a support level here, and that kind of kept me in the trade. I just kept the stop loss order right in below the lows of the day. If we broke down to the new daily lows, I was going to be out. But in the end, we booked an 11% profit. So what's the where to from here scenario? So this is an important chart because what we did is that we rallied off the lows of the day on Friday and we closed up on the day. So we had a bullish reversal bar. We didn't close at the highs of the day. And keep in mind, we did close down on the week. So I don't think that there's a huge rush to, let's change this. We're going to remove this. There's no huge rush to buy back in on UGAZ. But if you're looking for a support level to buy back in at, well, watch the close tomorrow. If it gaps down tomorrow, don't buy the morning. Let it settle down. Because if you get a pullback to this support level here, that's a good risk-reward entry point. I'll tell you that price in a moment. We'll keep a little bit of sensitivity. I would really wait for one of these alerts to fire off before I got involved with the trade. So that's one. Two, I'd want to see a retest. Suppose we don't go down to this support level here where I just drew the alert. What's our fallback position? Well, as a matter of fact, let's tighten this up. And I would only open up a small partial position at this support level number 2, because if you're wrong and it pulls back to support level number 1, you could add at that support level. However, if you break down to a new daily low, I would stop out, because that means that it's a new weekly low, and you don't want to be a part of that merry-go-round. That's not good. It's bad. Well, it's not letting me set this alert. Oh, that's why. Duh. That would help. Okay. So my alerts are set. So UGAZ is extremely volatile. So I would strongly encourage, set your alerts, let the shares come to you, and scale in. Don't get overly aggressive on your first buy. If you're going to get overly aggressive, do it down here at support level number 1. Then stop out if we take out last week's lows. If you buy at this support level number 2, buy small. If it breaks down further, add more here. Then you put your stop loss, again, right below the weekly low, a new daily low. And if you buy here, it doesn't break down, well, then you could add more on a rally up and through this upper band of resistance. So there's a few ways to trade this, but be careful. It's extremely volatile. Netflix. Okay, let's do monthly. Let's check out how Netflix closed out the month. Not wonderful. Really subpar. You never like to see these topping tails. That's a sign of sellers above, and we're at all-time highs too. So there's a couple of ways of playing this, and I'm not going to base it off of the monthly chart. Let's go to the weekly chart first, and then we'll talk about it. I get a feeling that I get a feel for what I believe is going to happen here. And I'm going to go back to the weekly chart in a moment. I have a fly here that's driving me absolutely insane. All right, weekly chart. Let's go back to it. Let's go back to the futures really quick. I just want to get a feel for the NASDAQ 100. We made new session lows since we began. We're off those lows considerably. We were down considerably a lot more. Very, very volatile. All right. So what I think may happen, if we open up weak tomorrow, this is the weekly chart. All right. Let's go back to, sorry to jump around like this. I'm just trying to get my bearings. I think that what we're going to do, because they couldn't hold this support level at 422.70. So I think that they're going to probably come back down here to 414.05 yet again. And they're going to try to test it. Keep it active for a few days. So I'm not going to be interested in buying Netflix unless it pulls back to that support level or we break out. I want like zero sensitivity. I just care about a breakout. Keep it every 4 hours, get notified. So if we don't pull back to this support level, I've already set an alert at, and the markets rally back, Netflix follows suit, well, then if we break out above that resistance level and we appear poised to close there, 3:55 Eastern Standard Time, we appear poised to close above that resistance level, then I'd be okay with pulling the trigger. Not until then. If we're trading above it at lunchtime or 2 o'clock, I don't care. I want to see 3:55 Eastern Standard Time. We're trading above that resistance level. We're not day traders here. All too many times, you see a beautiful long candlestick, and by the close, it's faded away, and you're sitting there holding the bag. And I just don't like that. So please, no impulse buying. Buy the fact. Okay. Keep it active. We'll keep it active for the week. What the heck? Okay. What else do we have to go here? Take a quick look at the daily chart. Doesn't look like my alert took. There may be a lag here. I'll come back and do this later. I don't want to bore everybody. Interesting. Why didn't that take? I got to come back and play with that. All right, let's go move on here to TMO. This is for Trisha, I believe. The weekly chart looks really, really good. Man, I'll tell you. Watch, you take a look at this chart. No automated trend lines. And you think, wow, all is right with the world. And you throw up those automated trend lines. Be careful, we have resistance above. That doesn't mean it can't move higher. We're going to have a new bar that opens up. You still have more room to the upside here. But you can see we were stopped right there last month. Weekly chart. Now the weekly chart, we had a bullish key reversal last week. We were down. They tested the support level. It held. We rallied back. And if I could ask you folks, before I have one of my members remind me, please smash the like button if you could. Subscribe to the channel. Oliver, I could do SNAP, but I can't do Uber because of a potential conflict of interest. I can't talk about the ride shares we want to avoid any conflict of interest. Manoj. Okay. So Thermo Fisher weekly chart. Bullish key reversal looking good. Daily chart. Really, really good here. Really, really good. Very, very nice. Boom. Breakout. You know, if the market pulls back tomorrow and TMO comes along with it, if you're looking for an entry point, I mean, right here. Would be perfect. Let's bring this down a little bit further. Right here. If it pulls back, touches. We'll keep it active for a few days. So ideally, that would be an entry point. You could either open up a position at or add to a position and put a stop right below. I'll keep it a little bit loose here. If you want to keep it tight, 339.70. If you want to keep it loose, really loose, around 332.50. But the chart looks really good. Stokes are rising. RSI is rising. It's broken out as well. Very, very nice. Like the chart. PGNY. I can already say the daily chart looks really good. Let's go high level, though. Stay consistent. Not a lot of data here, which makes me nervous. Weekly chart is probably not going to be data here as well. Not that all that much. All right, so you're in an ever-tightening triangle formation on a weekly basis. I'm not familiar with this company, so I'm probably not going to trade it. We closed at 24.96. You have resistance up at 27.40. So it looks interesting from a short-term swing trade perspective. I think you could have a scalp, a quick profit. Let's overlay weekly resistance. This is a daily chart. I'm now going to overlay weekly resistance on top. See if anything shows up. Not enough data yet. Take that off. Let's go back to the weekly chart for a moment. Digest this. All right. So how I would play is this. I like the daily chart. You could argue that we broke out. In fact, it's not arguable. We broke out on Friday. You have resistance immediately above at 25.17. So the way to play it would be, if you get a pullback and a retest, you can tell them huge on retest. They happen more often than not, and that's why I'm so big on repeating myself with trying to take advantage of them, because it validates the breakout, and it gives you a great opportunity to place a stop loss under a very, very well-known support level. So very little downside risk, lots of upside potential. So if we pull back to a retest of this support level at around 24.66 to 24.43, that looks interesting. Or if you don't get it, or if you buy here, you want to add more, buy more on a close above 25.17. That would be a close above resistance, and that would be a good risk-reward place to add or open up a position. And then I would be looking to book my profits up here at resistance at around $27 per share. Make those profits real, because remember that on a weekly basis, you're still in a fairly wide trading range. And it's ever narrowing. It's a triangle formation. It's ever narrowing. Forget about these annotations here. We want to only show them on only on a daily basis. Yeah, as a matter of fact, I'm just going to get rid of it. I deleted the wrong one. Damn it. Okay. Let's take this back up again. And there's the lower band of your triangle formation. So in all probability, at some point in time in the near future, you're going to get a pullback and a retest of support. So I'd be looking to book profits on any rally right up here. at this resistance level. If we break out above it, great. Good stuff. Stay long. But I'd be looking to book profits up here because I think ultimately we're going to pull back. Moving on to DBA. Eric. This is an agriculture ETF. And we've talked about this quite a bit because we have been bullish on agriculture. And last month, what you saw on the DBA, and this is not a swing trade, this is a more longer-term investment. The DBA flashed a doji star formation. It was the first month in several where we didn't put in a new monthly low. We have on RSI a higher low. Weekly chart. So we broke out back here the week of May the 4th. We've been consolidating ever since because we have resistance above right here at 1397. But we do have support down below at 1317. So we're in a pretty tight trading range. And this is not a high beta ETF, meaning it's not very volatile, even though it's a commodity play. So we're in a nice trading range. I don't see any rush from a weekly perspective to buy. Daily chart. Maybe this will influence me a little bit more. A lot going on here in terms of resistance levels. We're going to take off this, remove this one. We are going to remove this one. This is the one I care about. That's the Pimp Mac Daddy. We want to close above that resistance level. Or pull back to support at around 13. Let's go with last week's lows. We'll keep some sensitivity there. Let's go with an hourly chart, an hourly bar. I'm going to keep this active for a while, 10 days. Now, what I want to do here is set another alert. And the beautiful part about setting these alerts is that if you're an impulse trader and you rely more on your alerts to signal whether or not it's time to enter a position because you're not making decisions in the heat of battle, you'll find that your consistency of profitability increases dramatically. Because again, it's not impulse buying. You've done your analysis ideally after the close, before the market opens, whenever. You set your alerts. Let the shares come to you. DBA breakout. Okay. And we'll keep this active for 10 days. Now I don't have to worry about it. I don't have to track it. So that's my game plan. If we pull back here, we buy. Small position. Then if we are lucky enough to break out, retest support, we buy more. So, as a matter of fact, I want to edit this. Oh, it's not going to let me edit the expiration. All right. Okay. All right, so we're in a wedge formation, ever tightening. I think we're in the next few weeks, this is going to break out. So I'm very bullish on it. Trisha, you're welcome, Trisha. TA, you're long of DBA already. Good for you. 1350? Nice. Excellent. Oliver again, smash the like button. Smash the like button. Yes, please. I beg of you. We'll take a couple more. We have a few minutes left. Oliver. ABIO. Oh, ARCA again. Okay. Ooh, this didn't end well. But we kind of knew it was going to happen, right? So we rallied up and through the third standard deviation Bollinger Band, and this is how it usually ends. All right, so that doesn't mean it can't move higher. It just means that it's going to take a bit more time because you're going to have a lot of overhead supply above. Weekly chart. You're still overbought here, despite the pullback. You're still above. We closed out the week above the third standard deviation Bollinger Band. So right off the bat, I can't buy this. I mean, RSI looks really, really, really nice. You know, and it could skyrocket on Monday for all I know. What do I know? But the discipline is that we will not buy a stock that's closed above on any time frame that's closed above its third standard deviation Bollinger Band because it's going to pull back. And I don't see any. You had a big inside day on Friday. We closed down below support. I think that if you're not long right now and you have the discipline to wait, I think that you can retest all the way back down here. It'll be a brutal pullback. But that's where I would be interested in that. Because remember, that weekly overbought condition, it's not supposed to be there. And you may be saying, it's pie in the sky what you're saying right now, Bob. And it may be, but we have to manage our risk, right? So if I'm being pressed to say, okay, when are you going to execute a trade here? This is it. If it doesn't come to me, I'm not doing it unless this chart changes at some point in time in the future, and maybe it will. My story may change, midweek, late next week, but we need more consolidation here. We need more of a pullback, and too much risk, not enough reward for me right now. Hey, Chuck. Yang? Yeah. Yang, you got to keep it loose. You got to stay small and loose on Yang. I think the outcome here, I'll keep it simple with Yang. And I think Trisha, I don't know if Trisha's still on. She was talking about buying the call options, and it's this thing could just vacillate in this trading range for a while, and given the price action on Friday, we may just retest lows. So if you got stopped out, Chuck, don't beat yourself up about it. You set a stop loss for a reason, and it's no big deal. I think that the outcome here is going to be that the president was verbally tough on China, but he lacks specifics. If China loses or Hong Kong loses their special status, their banking status, China's in big trouble. Big trouble. The problem is that our stock market is going to be in big trouble as well. So he can't afford to have a big stock market correction. If you're worried about a macro event, a geopolitical event coming in and hurting the stock market, that would be one. So he's going to talk tough on China because he needs a villain, and they are a villain. They are the ultimate Bond villain is President Xi. Now, I'm sure the hammer is going to come down on China. I'm as sure as God made green little apples it's going to happen. It's not going to happen until after the election. But soon after the election, assuming the president is reelected, it's going to happen. If you got stopped out, don't beat yourself up. I think that ultimately we could pull back down to here, the 36.30, retest it. We'll probably bounce. If we don't, be happy you got stopped out. So look to buy back in at that level and put your stop loss right below it. If we make new all-time lows, get out. Don't beat yourself up. Here's the weekly chart. We had a bearish reversal bar on the week. We closed at 36.72. Where'd you get stopped out at, Chuck? I think we'll probably see lower lows. Just stay small with this ETF. And for those who are not familiar, Yang puts you short of China. Leveraged ETF 3 times. Here's another support level down here. I would show discipline, ideally wait until we hit 35.06 before you added more. You got stopped out at 37.50? You should be happy. You're probably going to see lower lows. That's fine. Be happy you did that. All right. Costco. You want me to go over to Costco? All right. All right, so Costco, I love the chart. I went over this yesterday on best stock charts. I went over it in greater detail with members on the week ahead commentary in the members area. The one thing I do want to say, which I didn't mention on the week ahead commentary, but I want to mention it now, we have stiff resistance above at 314.14. And at this resistance level here, weekly chart, we broke out last week above resistance. Bullish reversal bar. Actually, not a bullish reversal bar. We didn't close at the highs of the week. We closed just off the highs of the week. We have our Stokes, higher lows, RSI, higher lows, and we broke out. Daily chart. Daily chart, we had broken out here on the 28th. Then we did a retest on Friday. Bullish reversal bar. You have to love it. So I think that Costco is going to break out again. Two-hour chart. I may need to wait till we close above 310 per share before we pull the trigger. Or if we get a quick pullback tomorrow morning, we may enter the trade. So it's a fluid situation. Assuming that we recover, we open with the futures up higher tomorrow, I would wait for a close above 310 per share, and then I would look to pull the trigger. Or on any pullback, because I think that we are moving up higher. All right, it's 7 o'clock now, folks. I'm going to call it a night. Everybody have a great night and have a profitable trading week. As a matter of fact, let's circle back really quick to the futures. See how we're closing out here? Or we're settling down, not closing out. Settling down. We'll go to the 4-hour charts. NASDAQ recovering a little bit here. An inside bar on this 4-hour chart. S&Ps still weak. Off the lows of the session, though. The Russell still very weak. I want to get notified if the Russell breaks to new session lows. Oh, I set it up wrong. Okay. Good. All right, let's check the dollar. Dollar weakened up. That means the gold probably strengthened. And it has. Gold looking good. Silver continues to rip. Up nearly a percentage point. Let's check those nat gas futures. Down 2.7%. Bearish reversal candle. So again, remember that UGAZ trade. Wait for those support levels to get hit. And with that, folks, I'm going to say goodnight. Again, have a profitable trading week. Smash the like button, subscribe, and everybody have a great week. And don't forget about, this is the final day, TrendSpider, 35% off. Normally, I only get a 25% off discount, so take advantage of it. And it's free if you're a gold or silver member, so join up and get it free. Everybody have a great night. Be well.